Hi everybody, this is a quick video on how to go over the buyer's closing disclosure and ALTA statement. Okay, so your closing disclosure, you'll get a few days before closing from your lender. I'm just going to give you a walkthrough of how I go through this, and hopefully you'll be able to look at that ahead of time and know what you're looking at. So starting up top, you've got your loan amount, the interest rate, and the monthly principal and interest. All of these no's over here are really good no's to the right-hand side. That means nothing can change after closing. Okay, everything's fixed and locked in. There's also no prepayment penalties, so if you do want to add some more to that principal payment at any point, you can do that and pay the loan off a little faster. There's no balloon payments, so you don't need to worry about any big payments coming down the way 3 or 5 years down the road, just the normal monthly payments. And moving on to that next section there, this is how you get your monthly payment. This example we're looking at is a 30-year fixed. They do have the mortgage mortgage insurance in there, so the PMI is part of this. It may not be part of yours, but that's here. And then the total at the bottom of that box will give you your monthly payment. Right under that, you've got a box that goes over the property taxes and homeowners insurance. You'll see usually that, yes, those are in escrow. The big thing here is that HOAs are not escrowed. So HOAs will be in addition to that monthly payment shown there. Down on the bottom, closing costs are on page 2 and cash to close is on page 3. Okay, so moving on to the closing cost page here. These are broken up into 2 categories. So the top half are called loan costs, the bottom half are called other costs. So starting up top here, this example, they brought the interest rate down of the loan just a little bit, so that's included there. The processing and underwriting fees are kind of the typical bank fees for closing loans, so you'll see those rolled in. Moving down to the appraisal, you'll see that that's in the before closing column, so that was paid for before closing. Everything else is going to be collected at closing. Next box is B there. You've got some miscellaneous items like credit report and flood certification. If you do have PMI, a lot of times they'll roll that PMI in here and they collect some of that up front, so that's shown there. Box C is actually a breakdown of any of the title insurance related fees for the deal. Generally in Florida, the seller will pay for the buyer's title insurance and the buyer will pay for their lender's title insurance. So usually after closing is done, we go over the title insurance policies and how that protects you. But this is just a breakdown of any of the endorsements or any of the coverages that your lender is requiring for your loan. Moving down into other costs, the first one is a recording fee. So the county charges a per page fee to record the deed and mortgage. We just pass that straight forward. And then usually there's a tax or sometimes 2 taxes on the mortgage. So believe it or not, you can't even borrow money with this government without getting taxed on it. So that's a tax on the mortgage there. Box F is your prepaids. You'll see that you paid the first year of your homeowner's insurance in advance. So the first year you're already covered. After that, your escrow account will renew that for you each year going forward. You also prepaid the interest of whatever month you're closing in. So there'll be a prorated date there from your closing date through the end of the month, and then whatever the interest is for that, they collect up front. Box G is your initial escrow. So you'll see that they do an estimate, they collect some money for homeowners insurance and some money for taxes. If they've estimated high and there's too much money in that account, you'll usually see a credit at the bottom of that box. So here in that case, it's $191. You'll get a credit at closing if it's at closing. Going forward in the future, if they ever have too much money in the escrow account, you'll just get a check back in the mail from the bank for that. Down on the bottom in box H, any of the other miscellaneous things. In this case, there's a homeowner's dues, so we call that the welcome to the neighborhood fee. Sometimes you'll have some HOA fees there if they have gates or keys or things like that. Sometimes you'll have broker fees there as well. So if your agent has a broker fee, you'll see some of that as well. And then what we do is just take the totals for the loan cost, total for the other costs, and that gives our total closing cost there on the bottom. Okay, so moving on to page 3, this is the cash to close page. So if you had to bring money to closing for closing costs and things, this is how we get to that number. Okay, so starting up top, we've got a loan estimate and a final side by side. Okay, that's a disclosure requirement the bank has to give you. In our example, generally they're about $400 cheaper than they thought. And then follow the column on the left-hand side of this page down. The first half, the top half, is any money that's due from you. And then on the bottom half is any money we're taking off of that. And then the difference between those two is your total cash to close. Okay, so in this example, on the top half there, we have the sales price for the property. We have the closing cost that we just covered on the second page. And then down here is assessments and HOAs. Anything the seller has paid in advance, you give them a credit for as of the closing date. So in this case, we have the assessments and the HOAs, which are settled up through the end of the year. Then on the bottom half of that, we just take off the deposit, the loan amount. In this case, the seller was giving a credit, so we take that number off as well. If you see title insurance adjustment or title insurance credit, that's where the seller's paying for your title insurance. So you can see where that's coming directly off your bottom line. And then down on the bottom of that page, you have county taxes. So the way this works in Florida is that property taxes are paid in November, but they're paid backwards for the year. So in November, our new buyer, you in this case, will pay property taxes for the whole year out of your escrow account. Since the seller has owned that for the first part of the year, you'll see a credit from January 1st through the day before closing. Okay, so whatever that is based on last year's taxes, you get a credit for that, and that way you and the seller are settled up for the rest of the year. The difference between those is the total cash to close. In this case, it was a little over $7,000. Okay, our fourth page are just some additional loan terms. We generally cover these in other documents, so we kind of skip these at closing. But in this case, this loan is assumable. So you see assumption up top, which means that somebody can take over your loan from you. The lender will have certain qualifications for that, but that can happen. There's no demand feature, so as long as you're making your payments, the lender can't accelerate those and call the loan due. The next one down, no negative amortization. That's a very fancy way to say pay the total bill each month. Okay, negative amortization is a way to pay less than you owe and tack what you don't pay onto the end. So pretty common sense there. Partial payments, whether or not the lender will accept partial payments. And then on the top right, usually the lenders are requiring escrow for the account. Okay, so on the fifth page, up top, on the top left, we have some numbers I like to go over at closing. I always call this the big scary page. So starting up top, you've got the big scary number, right? The amount you'll pay over the total lifetime of the loan. And then right below that on line 2, you've got the amount of interest you'll pay over that time as well. Now, this is where I always stop and tell our first-time home buyers, if you're able to make one extra payment per year, either in lump sum or with payments along the way, if you add to the principal payment every month, if you can make one extra payment per year, you'll knock about 7 years off the life of the loan. It'll save a ton of money on that interest on line 2 there, okay? You don't have to do that, but usually there's no prepayment penalty, so you can do that without fees if you want to. The other thing I like to touch on this page is the APR. The APR is usually a little higher than the interest rate. The reason for that is that includes your closing costs as well. So that makes it reflect a little higher, but the only thing that really affects your money and your payments is the interest rate on the front page. And then on the bottom of this page, we'll sign and date. Okay, the ALTA statement may look a little scarier than the other document we just went over. It looks like an Excel spreadsheet to a lot of people. But all this does is takes the seller's numbers and buyer's numbers and puts them on the same page together. This is a disclosure requirement for the government after the recession. On the buyer's side, you just want to focus on that right-hand side of the page, and you'll see that there's 2 columns, one for debits and one for credits. These are the same exact numbers that we just covered on the closing disclosure. The debits are any money that's needed from you. The credits are anything we're taking off of that. And if you flip to the back page, you'll see a total breakdown between debits and credits, and then a bottom line number. So you just want to check that that bottom line number is exactly the same as the bottom line on the closing disclosure that we covered first. Okay, so you can just see the total that's due from you, the total that we're taking off of that, and then that difference should match the closing disclosure dollar for dollar. That wraps up the buyer's closing disclosure and ALTA walkthrough. Hopefully you found this video useful before closing. If you're an agent, hopefully this added some value to you as well. If you did like it, go ahead and give us a like and a subscribe on the channel. We look forward to seeing you soon. Thanks.